My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Today our special guest is Cherif Medawar. Cherif has been in and around real estate for decades, and this gentleman has done a ton in a variety of different asset classes, in a variety of different locations, in a variety of different countries. And he's been teaching folks about real estate investing and helping folks with real estate for decades as well. So Cherif, welcome to the call. Great to have you.
Thank you so much for having me, Dave.
So Cherif, you do a lot. And one thing that I'd like to talk a little bit about is comparing and contrasting the real estate holdings you have in the market in Puerto Rico versus the state, specifically in San Francisco, because I think you're bullish on one and you're kind of trying to get the heck out of the other one. So tell us a little bit about that big picture first.
Thank you. You know, the investment life, it goes in stages. First, you work for the money. So you just get as much money as you can and you get it together, you build credit, and then you start flipping assets. So you buy and sell the properties. Usually residential is easier to flip. Some people can start wholesaling. I used to buy them, fix them quickly, and sell them with creative financing, like sell them and carry financing. And then after that, I realized the next step is to buy and hold. And I like the mixed-use commercial. Downstairs, I have commercial tenants. They rent for 5 to 10 years, retailers, jewelers, etc. So I chose a location in Old San Juan, Puerto Rico. It's a U.S. territory, a lot of tax advantages, right where the cruise ships arrive. Anybody has been to Old San Juan? It's right where people fly in from the U.S. into San Juan. They go to Old San Juan, take their cruise, and they start the cruise. Because it's U.S., you don't even need a passport. So I love the location. I would get these buildings and I would fix them. They're historic buildings. They have a lot of tax incentives with them. And it's been the best thing I did, because the cruise business is always going and it's always growing, and it pumps in 2 million plus passenger per year.
Wow.
Credit card at hand, they want to shop.
Yeah.
And
that's at your retail establishments. That's kind of convenient.
Exactly. And upstairs, we used to have long-term tenants. Airbnb started many years ago, so we turned into Airbnb. So it's just very flexible. There is such a need for hotel nights there. We make a lot of money. So that is kind of the steady cash flow from which I can kind of pass on to my kids, have a good life, etc. But I don't want to stop there. So I set up a real estate fund in 2009, some 15, 16 years ago. Yeah. And I started pooling my money with investors' money, my students' money. And we used to buy these properties in San Francisco, specifically high-end residential, 4 or 5 million. We put a couple million rehabbing it, flipping it for 8, 9, 10 million. So it was
so heavy duty.
Oh yeah,
luxury flips is basically what you're doing.
You're absolutely right. And full-fledged remodel. I mean, we just gutted them out. It was just like crazy stuff. And my fund's called Mixif. We ran it for years, and until right after COVID, where things started going crazy. Kind of 2021 market went up, 2022 market was down. Interest rate was going up. It was like all over the place, but we had confidence in San Francisco. So we bought a bunch of luxury homes on Billionaire Road. This is Broadway Street. Parallel Street is Vallejo. This is where John Paul Getty Trust, they got 3 properties. Steve Jobs' wife just bought a property, 70 million. I got a couple million, $10 million each. Yeah. One at 9, the other at 10.5. Anyway. And we just couldn't get the city permits. We couldn't get the any city cooperation whatsoever, and we kept getting delayed and so on. And with other parts like in Presidio Heights, Pacific Heights, and we said, you know what, we don't need to fight the world in San Francisco. It seems like.
So what happened? Was there a change in government there? Why did they become such a pain in the butt?
Just like give you an example, when I called the city planning, the gentleman said, hey, listen, we're working from home. We got a pile of stuff here. 4 people went to jail because some bribery to the city planning. So we're all behind and everybody's afraid to make a decision. I'm like, oh my God, this is like surreal. You can Google that. You'll see four
Yeah,
people
yeah.
went to jail because of bribery. Well, my question is, why did some developers bribe them? Because probably the developers were stuck like me, getting delayed, and they went with an envelope 10K or 20K. Please help me. I'm going to lose my staff, lose
Wow.
my money. But anyway, so I said, we're going to start to bail out. So we finished a couple of properties, sold them, a couple others, sold them as is. We just have one property left. So no, I'm very bullish on places like Puerto Rico, where there is steady kind of business that comes in, because the driver of the business is tourism and is the cruises. That will never stop. I mean, if the market is bad, cruises drop the prices in half. They're always going to fill up, and they're always going to use Puerto Rico as a place, a hub, a start point, an end point, because it's US and it's a third.
Yeah, well, I see so many advantages to Puerto Rico. I mean, I lived for 10 years in Costa Rica, so
Oh,
I'm familiar with Latin America.
yes.
But Puerto Rico is like perfect because it isn't the United States, but it pretty much is.
Yes.
So it's a lot safer. Like the other countries, it's like the Wild West, especially as a North American trying to buy property. Some places you can, other places you can't. You can't have it in your name. You have to get a Presto Home. But it's all this weird stuff. I
Yes.
think you can avoid that in Puerto
Totally.
Rico. Yeah.
As a matter of fact, in Puerto Rico, they speak more English than in Miami. Number one. Number two, you don't need a passport. It's like flying to Houston or something. You
Yeah,
just
yeah.
walk in, and the banking system, same, FDIC, you have the FBI, you have the,
Yeah,
everything,
everything.
yeah, US. So it has worked out well. And then, I have my education company, so I train people. And through training people, I get to hear a lot of stories. And I saw that there are some other parts of the country that have been hurting, like Seattle, Austin, Texas, rent dropped 20%.
Wow.
There are delays. So you got to just be so careful about the location and the timing.
So, Sharif, we were talking a little bit before we started the recording, and you said that one of the things that you've really mastered over the years since starting your own fund many, many years ago
Mm.
is helping people set up funds. So maybe
Yeah.
let's talk a little bit about that, what role that can play in an investor's, you know, investing life and kind of how it works.
Yeah, great. So I had quite a few students that I call them students, but they're, I mean, really professionals. They're making money. I have attorneys that come to my trainings because I train kind of commercial, high-end properties, creative financing that are just very esoteric, that legal, but really take the game to another level. So quite a few people said, listen, well, how can I scale and go big? And I said, well, show me the strategy you're using. Great. The money is not in the strategy. The money is in the structure. As a matter of fact,
Interesting.
if you want to make money, it's the structure. If you want to save money, it's the structure. If you want to protect yourself in the structure, and most people don't know how to structure. And when you call attorneys, attorneys are good and trained, but they want to pigeonhole you in the area they're expert in. You can try to do asset protection. You find some attorney that does offshore trusts and Cayman Island, whatever. I don't want that. And so I created my own programs for asset protection, how to make money and how to save money, actually saving the taxes through Puerto Rico, believe it or not. And the most important one is, hey, if you really want to scale, you got to set up the Reg D 506C. Reg D is the regulation approved by the Securities and Exchange Commission that allows individuals to raise capital, make the decision on how to deploy the capital, and return profits to the investors while these people raising the money, could make all the decisions. These people are syndicators or fund managers. What's the difference between a syndication and a fund? A syndication is when you raise money for just one building. So you're going to syndicate this apartment building. It's going to be a $5 million building, going to raise $1.5 million, put $1.2 million down payment, 300,000 reserve, and do the deal. And you're going to say it's going to take 5 years to rehab, kick out some tenants, improve this, that, and then sell it. Those are kind of equity syndications whereby you pay the investor some money, cash flow. And then when you sell, you give them maybe 70% of the upside.
Right.
As a syndicator, you make money. When you raise the money, you make like an acquisition fee, 3%, some management fee, and on the upside, a disposition fee, 30%. It's a long way to work very hard and get paid very little.
Yeah.
But it's a way to scale also, okay? Because you're working other people's money, and it just makes it grow bigger. The best structure is a fund, because a fund, you set up like a mutual fund. So I can set up once and I don't have to keep setting up and go pay attorneys $25,000, $30,000, $35,000 each time I do a syndication. You set up a real estate fund once and you say, I'm going to bring in residential, I'm going to bring in commercial, I'm going to do flips, I'm going to do seller carry back, I'm going to do tax liens, tax deeds, 12 different type of commercial. I do it nationwide, including US territory. So I specialized in the structure. I set up my own structure in 2009, 16 years ago. And I thought I would raise $5 million in a year. We raised it in 90 days. It was very fast. And we started growing like crazy because there are ways to raise the capital. There are certain words you have to say that are in compliance with the SEC, but still it explains to the investors how to do it. So the ideal setup is a Reg D 506C real estate fund, so you can be up and running until you decide to close it. So it's an open-ended. That's number two. And to do it as a debt fund. What's a debt fund? I am not going to pay you from the upside. I'm going to pay you a little bit more on the cash flow based on how much you're going to put in. So I created a formula, 25,000 minimum share to get in. After they put they acquire the first unit in the LLC of the fund, they can buy fraction units. So let's say they have 67,000 they want invested, they can invest all 67, etc. But it's 25,000 a unit, and 25,000 to 249, they get paid 6% a year. So the investors like the steady return, and I do the payouts. I explain to the people I help them set up, do the payout twice a year. Sometimes we use like February 28th, August 31st. So every 6 months they get a payout. So people they invest 200, like 25,000 to 249, they get 6% a year. But if they invest 250,000 or more, they get 8% a year. That's 4% on February 28th, 4% on August 31st. This way, the fund manager is able to deploy the capital intelligently with time to get it to work, paying the investors these steady, reliable returns. The risk is reduced. There is always risk, of course, but the risk is reduced because now you can get this apartment building, you can get this hotel, you can do this development, you can do this flip, you can do this seller carry back, you can buy a discount note, all this inside the fund. So the diversification, the safety of the assets you get in, the cash flow and cash outs, the liquidity, the reserves, all this works together, creating an incredible structure to grow. And here's the best part. The investors love that 8% a year. And like in my fund, almost 40% of the investors elect to reinvest the money. So that instead of getting paid, they get to compound the money twice a year. It's
and buy more fractions of shares.
And 8% compounded, it's like the money doubles every 9 years. So, take the first 10 years, it's like making 12% annual rate of return. 20 years, it's like making 20% annual rate of return. So you get people that invest their IRA money, get people that want to live and retire off of this cash flow. But the best part is not only are the investors happy, when you work some buildings and you want to sell, you increase the value now. When you want to sell them, all the upside is yours. So as a fund manager, you can become very wealthy quickly. With 100 million raised as a fund manager, you will need to raise like 700 million in assets to do the same thing with the syndications. There's just no comparison. So we've specialized in doing this. We've been doing it for the last 7 years with many investors that come to me. We just explain to them the business plan. I do a call with them, show them exactly how the structure will work for them based on what they want to do. Then we do a conference call with the attorney, draft the private placement memorandum, and then they meet with me for a full day of training. And we did it for 35,000, all included with the full day training with me, etc. And every now and then we run like specials to do it at 25,000, all included with the filing fees and everything with that.
So they get the fund and the training all.
Yeah, I don't think anybody can beat this because attorneys.
No, I don't think so either.
Yeah, because attorneys get scared of doing suggestions and ideas because they can get liable. But I know exactly how to do it, following the code and following the rules, because I've done the Reg D 506B, the Reg D 506C, I had the Reg A+. I've done it all. I was audited by I did what's called administrative audit by the SEC about 5 years ago. So we've gone through a full audit with that. So I know exactly what they look for. So I became an expert, whether by choice or by default,
by accident. Yeah.
It's just, so I pass on that, and it's been great because I also get to learn what they do, and it opens my network. So sometimes I have investors that set up funds and they sold properties so they have a cash. So I get a call, hey, I got 700,000 sitting. Do you know any of the other people you have that have a deal? Oh, yeah, I got Franco over here who just got this property. They need an extra 500. You want to go in with him? I put them in touch. So the networking started to grow, and you do
Yeah.
something good.
Well, can I ask you a basic question about
Sure,
that, Sharif?
sure.
So if somebody's setting up a fund, I mean, it makes sense. Everything you said makes a ton of sense. Some people might be a little bit scared about having to pay that interest payment
Yes.
if the asset that they have in the fund is going to take a couple of years to stabilize, to start generating cash flow, that sort of thing. So what do you suggest in that scenario? Or should it be somebody that's doing a variety of different things so that they're definitely creating cash flow in the short term?
Great question. So your question is, okay, Sharif, I'm starting the fund. I'm gonna do a deal, but it's gonna take me 10 months to get it to start cash flowing. What do I do?
Or longer. Sometimes it takes
Or
longer,
longer,
right?
18
Yeah,
months. We're doing development from the ground out, 22 months. Okay.
yeah, yeah.
So I created something called the hybrid fund. The hybrid fund gives you the class A, class B shares that you pay steady. And then we created the class C shares that give you that flexibility. This is so advanced that I can take somebody who's going to do a project that's going to take 3 years, and then he's going to be able to pitch it, raise the capital, and tell them, I'm going to put you as class C shares because we're going to pay you this way. For this project, we're going to do this, and you're going to be in this project in the fund. So in one structure, you have the best of all worlds. You have the blessings of the SEC, the Securities and Exchange Commission. You have the investors' excitement to get into the deal. You have the different ways to pay them in three different structures: class A, class B, steady returns, or you tell them, I'm going to put you in a class C, which is a special class of shares because this project is not going to start paying until 36 months. And you want to stay with us for this. And by the way, with the real estate fund that we do, we charge no fees. No acquisition fee, no management fee, no disposition fee. They put their money on Monday, they start accruing interest on Tuesday. But then we can do the payouts later. And then we give them incentives. If you're going to stay with us a little longer and accept the payout later when the project does this, we're going to give you a kicker of 2% per year. We're going to give you a kicker of this and that. So
Nice. So
is
so much flexibility.
exactly.
Smart. That's really, really
And
smart.
it's easy to explain, easy to pitch to investors.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Well, that was the other question I was going to have. And obviously, you can't give away all your secret sauce here. But generally speaking, especially these days, a lot of people are finding it more difficult to raise capital, especially if they've been in the multifamily space,
Yes.
especially if some of their LPs have been burned on some of these syndications that have gone wrong. So are you finding that it's easier to pitch these opportunities to people that are newer to real estate or to more established people that have been LPs in other deals before? What are you guys seeing is working best?
I see that it's attracting the realistic, conservative investor out there who wants a more reliable return that is actually investing in a fund where if you have only 25,000 in that fund, that is a claim on the fund that has all these different type of assets. And even if you just started, you're putting the first asset, you're telling them we're going to acquire more assets. So they like that versus them putting their money, their 25,000 or 250,000 or $1 million in just an apartment building or just a storage facility. God forbid there is a hurricane in Florida or there is an earthquake in California. And next thing you know, the insurance is only covering so much. And this is what's called capital call. So the investor got to come. So when it's explained to the investors, listen, these are different times. Market is all over the place. The Fed don't want to drop the interest. We got war in Russia. We still got turmoil over this and that. So here is a steady way for us to make money. We know real estate is safer. Insurance premiums have been higher, but we have this project. We also have this situation. We're also taking advantage of some foreclosures that the bank want to dump, and we're going to work with the bank because we're showing them the proof of funds. So then the investors understand. And I can tell you, I was teaching one of my investors. We set him up with a fund, and he contacted the office. He said, okay, so I did a great presentation. We raised money from 4 people. There were like 15 people in the room, but 4 people. But one guy asked, he said, the guy asked, okay, well, what will happen if the market goes bad? And he said, I told him, well, that's why we're set up this way. It's because we're anticipating the market to go bad because it's cyclical. And he said that the people understood it. And once they understood that, it was easier for them. We didn't have to explain, we have a preferred rate and a waterfall, and if this goes this way and this, it was simple. And he said, that attracts a lot of people. He said, should I be saying that? Is that correct? I said, of course. But you have to always disclose that there is some risk, because there's always risk.
Yeah.
So it is, it's a bit of a challenge in today's market, but the whole idea is to present something that's safer. And I also challenged them. I said, what if somebody raised their hand and said, hey, listen, somebody else is offering 14% return.
Exactly.
We're only offering 6 and 8 and some hybrid things that I have to put more money to get special rate. And the answer is, we're not asking you to put, let's say you want to invest 100,000. Don't put it all with us. That 14% is only a syndication. It's high risk. It's one deal in one place. Something goes wrong, you're going to lose. That's a high risk, so they got to pay more. But if you want to put 50% with them and 50% with us, that will be wiser.
That's smart. That's smart. Yeah.
And you just got to tell the truth. But I believe in raising capital through education. Here's what we do. Here's what's in it for you. Here's what you should do about it. And then people say, I got it. I want to invest X.
Yeah, no, that's very smart. Cherif, this has been a fantastic conversation. Time flies when we're having fun. I have to have you back on the show because you're a wealth of knowledge, that's for sure. But if people would like to connect with you, what's the best way for them to do that?
The best way is to reach my vice president. She's been with me 20 years. It's Ashley at cmrei.com. Ashley is spelled ASHLEE. At C like Charlie, M like Medawar, R like Robert, E like Edward, I like international.com. Cherif Medawar Real Estate Investing, cmrei.com. I look forward to talking to some people, and thank you for giving me the chance to explain to people what we do.
Well, thanks for being on the show, and everybody, thanks for tuning in. We'll see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.